Turning $500 into $5,000 might sound like a fantasy, but with the right strategy, timing, and discipline, it's more achievable than you think. In today's financial world, you don't need to be a Wall Street insider or have a six-figure salary to build real wealth. What you do need is a smart plan, a long-term mindset, and the courage to start. In this episode of Smart Money Moves, we're walking you through the exact steps to grow a small investment into a serious return. From high-potential stocks and crypto plays to compound interest hacks and passive income strategies, this isn't about luck. It's about leveraging the tools that work. Whether you're just getting started or looking to make the most of your limited capital, this guide is your blueprint to financial transformation. So grab a pen, hit that subscribe button, and tap the bell. Because your $500 journey to $5,000 starts right now. Let's get into it. 5. Shift from consumer to investor mindset. If you want to turn $500 into $5,000, the very first transformation doesn't happen in your bank account. It happens in your mindset. Most people view money as a tool to fulfill short-term desires. Entertainment, fashion, food, fun, that's the consumer mindset. And while there's nothing wrong with spending, the harsh truth is this: every dollar you spend is a dollar that loses the opportunity to grow. To change your outcome, you must change your identity from consumer to investor. An investor sees $500 not as spending power, but as seed capital. Instead of asking, "What can I buy with this?" the investor asks, "How can I make this multiply?" The investor isn't focused on how impressive the return looks in 30 days. They're thinking in years, not weeks. This shift unlocks patience, discipline, and clarity. You stop chasing shiny objects. You stop reacting to every headline. You start studying value. You become a builder of assets, of systems, of leverage. This mindset doesn't just help you grow $500 into $5,000. It teaches you how to turn $5,000 into $50,000 and beyond. Without this shift, every dollar you touch leaks potential. With it, every dollar becomes a soldier in your wealth army. 4. Choose asymmetric opportunities that compound. Let's be honest. You're not turning $500 into $5,000 by investing in blue-chip stocks that return 7% a year. If your capital is small, you have to go where asymmetric opportunities exist. Areas where your downside is limited, but your upside is huge. The idea is simple. Lose $100, no big deal. Gain $1,000? Game changer. Asymmetric investing means placing your money where the potential reward dramatically outweighs the risk. In 2017, that was Ethereum. In 2020, it was Solana and NFTs. In 2023, it was AI stocks and early-stage DeFi projects. In 2025, those opportunities are still out there in areas like decentralized AI infrastructure, tokenized real-world assets, Layer 2s, creator monetization platforms, or even undervalued small-cap ETFs. But there's a catch. These opportunities are high-risk, high-variance, unless you apply knowledge. That's the difference between gambling and smart investing. Study the projects, read the white papers, understand tokenomics, team vision, and real-world use cases. If you can spot a fundamentally undervalued project with network effects, that's where $500 can 10x. Don't spread yourself thin. Focus on quality, not quantity. And don't expect miracles in 30 days. The best asymmetric returns often require time to mature. 6 months, a year, sometimes longer. But if the thesis holds, the reward makes the wait more than worth it. 3. Let time, discipline, and compounding do the heavy lifting. Compounding is often called the eighth wonder of the world, and for good reason. Most people underestimate what they can do in a few years, and wildly overestimate what they can do in a few days. The truth is, $500 can absolutely become $5,000, but only if you let time and discipline compound your efforts. Let's say you invest $500 into a growth stock, crypto asset, or index fund that returns 20% annually. That doesn't sound huge at first, but keep adding $100 each month. Reinvest your gains. Suddenly, in just a few years, you've crossed the 5,000 mark. Not through some miracle pump, but through math. Even better, you can speed this up by stacking returns. Reinvest profits into higher-yielding positions. Use small wins to fund bigger bets, or diversify gradually into safer, longer-term vehicles. But don't withdraw your profits too early. Don't try to time every top. Just let your system do what it's designed to do. Grow slowly, then all at once. The magic isn't just in the numbers, it's in what happens to your behavior. You start seeing money differently. You stop trying to get rich quick and start focusing on getting rich for sure. Because when you combine a solid investment with enough time, the results become exponential. $500 becomes $5,000, not through chasing, but through consistency. 2. Use that $500 to buy leverage in the form of skills or systems. This is the strategy that most investing gurus never mention, because it's not glamorous, and it doesn't make them affiliate commissions. But it's the most powerful move you can make. Invest your $500 not in assets, but in yourself. Think about it. What if you used that $500 to learn a skill that generates cash flow? Copywriting, affiliate marketing, digital design, no-code development, YouTube automation, Amazon KDP, print-on-demand stores. These aren't side hustles. They're small businesses that require minimal capital and scale with effort, not inventory. Let's take copywriting, for example. With $500, you can take a premium course, build a portfolio, land your first few clients on Upwork or Twitter, and start charging $50 to $100 per email or landing page. Land 10 clients in a month, and you've already hit $1,000. Now, you reinvest that cash into paid traffic, a website, or scalable digital products. That's how $500 turns into $5,000. Not by hoping for a moonshot, but by building leverage. You're not just investing in a skill, you're buying time freedom, financial freedom, optionality. And the best part? Once you've built that engine, you can funnel the profits into high-yield investments, crypto, stocks, real estate, whatever you want. Now, your capital is multiplying both through your work and your portfolio. Smart investors don't just invest in markets, they invest in themselves, because they understand that the best ROI often comes from turning human capital into financial capital. 1. Build a repeatable, low-emotion wealth machine. All the strategy in the world is useless if you're ruled by emotion. That's why, if you want to go from $500 to $5,000 and beyond, you need a repeatable system. A machine that works without you constantly tweaking, doubting, and second-guessing. This is where real wealth is built. Not through excitement, but through clarity and execution. Here's what a wealth machine looks like. You define your monthly investment amount no matter how small. You allocate it based on your personal goals. Maybe 50% to long-term plays, 30% to medium-term growth, 20% to asymmetric opportunities. You track results, but you don't overreact. You automate where possible. You don't pull profits unless the thesis breaks or a better opportunity arises. This system should reflect who you are, your risk tolerance, your vision, your time horizon, and it should evolve with your income and knowledge. The more you earn, the more you allocate. The smarter you get, the better your decisions become. Most people never build a system. They act on FOMO. They panic sell, they chase trends, and their results reflect that. But if you build a plan, stick to it, and refine it with experience, you create a personal blueprint for wealth. One that can take $500 to $5,000, and eventually to $50,000, $500,000, and beyond. This is the real secret. It's not about catching the next big thing. It's about creating a structure that compounds your capital, your skills, and your consistency, over and over again. Turning $500 into $5,000 is not just about money. It's about how you think, how you act, and what you build. Most people want shortcuts. Smart investors want systems. Most people want hype. Smart investors want habits. If you change how you see that $500, not as an amount, but as a foundation, you'll change your future. Because wealth isn't built in one lucky move. It's built by making one smart move, over and over again. Every big portfolio starts small. The secret isn't having thousands to invest, it's knowing what to do with the first few hundred. If this video gave you a new perspective on building wealth from the ground up, don't forget to like, subscribe, and hit that bell. Because we're just getting started. Turning $500 into $5,000 isn't about shortcuts. It's about strategy, patience, and making every dollar work harder. Whether it's crypto, stocks, ETFs, or compound interest plays, you now have a blueprint to build on. So where are you starting from? Are you picking your first asset? Researching long-term strategies? Or already making your money grow? Drop your journey in the comments. Let's inspire each other and grow together. If you want more content on building small portfolios, low-risk investing, or high-yield opportunities that don't break the bank, just say the word. We're here to help you flip potential into results. Thanks for watching, and remember, it's not about how much you start with, it's about starting smart. See you in the next one.